Hello and welcome. You're watching Business Today Television. I'm Sakshi Basra and this is What's Hot, a show that focuses on the biggest buzz on D Street. Today, viewers, it's all about Ayodhya, which is bracing for the Dwajarohan, the flag hoisting ceremony of the Ram Mandir in Ayodhya today. This ceremony marks the completion of the construction of the Sri Ram Janmabhoomi temple. And this is the temple's transition from a construction site to a fully sovereign divine abode of Lord Ram. As per the temple trust officials and the priests, this ritual proclaims the site's spiritual activation as well. And with this, viewers, Ayodhya is evolving beyond pilgrimage, also into an economic hub. Ayodhya is now emerging as a major center for cultural, spiritual and economic activity. Events like Deepotsav, led by Chief Minister Yogi Adityanath, have been continuing to draw lakhs of devotees every year, boosting the local jobs and small businesses. And with the completion of construction of the Sri Ram temple, you will now see the tourism economy now getting a booster. There is an expectation that Ayodhya's tourism economy is likely to generate 18,000 crore rupees by 2028. Ayodhya is already witnessing an unprecedented tourism boom as millions of visitors continue to arrive to experience the Ram Mandir and the city's spiritual heritage as well. Officials are already saying that this rapid growth will play a major role in helping Uttar Pradesh to achieve its $1 trillion economy target as well going forward from here. So let's straight away dive in and try and understand, what do you see as Ayodhya's economy is all set to get bigger, and of course sharp boost can be seen to a lot of sectors and industries that are already setting up in Ayodhya as well. Let's welcome our guest on board. Tapan Joshi is joining in on our program to share with us his views on both the economy as well as an overall understanding of the markets today. Warm welcome to you, Tapan. Good to have you with us. Well, just like how I pointed out, there are already some big targets being discussed at the intellectual mind's end that are hoping that this big event that's massively unfolding today, with about 8,000 visitors, Prime Minister Narendra Modi now eventually will be doing the flag hoisting, or the Dwajarohan as it is being called. Help us understand, what do you see as Ayodhya's economy set to get a booster shot?
Yeah, thanks, Sakshi. See, overall, it's a big moment, and big moment for Uttar Pradesh also. And see, religious tourism is always in demand. Normally, the rooms get filled fast, and if you see from here also, more than double-digit growth you will see in this area also. Because of Ayodhya, you can see the tourism demand is going to stay strong for coming years. As and when even the infrastructure will build up, I think that will create more demand overall. Ayodhya is going to be a major hub as such, and massive hotel supply is going to come near that Ayodhya. And like major hotel industry companies like Indian Hotels, ITC, even you can say that small or medium-sized hotel companies are also, you can say that they are announcing their hotel chains there, and F&B also is going to go up. So footfall will go up, and which will bring the extra revenue to all these hotel industry. Even if you see the ticket booking, that is also getting boost. More and more trains are allocated towards that area, and even the buses and all that. So it's a whole economy which is going to get boost from here. And I think majorly, maybe more than 20% growth you will see in this sector towards that area. And I think that will help UP overall to grow. And religious tourism is been there where booking happens normally 4 or 5 months before only. So room rates are also on a higher side. So yes, it's a win-win situation for the whole tourism. And I think this will continue as and when the influence and the impact of Ayodhya will grow from here.
Absolutely. Tapan, you rightly pointed out, I think the biggest tourism boost is going to be seen from the emergence of hospitality hubs there, with nearly 23 crore visitors that have already visited Ayodhya between January and June of 2025. By December, the total number of tourists this year alone is expected to touch 50 crores in Ayodhya as well. And this massive influx is driving economic growth, with tourism revenue also expected to reach now 4 lakh crore rupees in the coming years as as well. In fact, remember, Chief Minister Yogi Adityanath has made tourism a core part of Uttar Pradesh's plan to become a $1 trillion economy by 2029. And Ayodhya currently contributes about 1.5% of the state's GSDP, a share that is set to rise sharply as the city expands its hospitality and service sectors as well. Since the construction of the Ram Mandir, over 2,150 odd crore rupees has already been spent on development works in the city as well. Now, to cater to this huge demand and influx of people, over 76 new hotels have already opened in Ayodhya. Leading hospitality brands, HPCL, Marriott, Radisson, Lemon Tree Hotels, they've heavily invested already, and many more hotels are likely to emerge as well. So when it comes to an overall investor looking for opportunities there, do you think they should look at hospitality sector at this point in time to really look at what would entail a long-term growth for their own portfolios? Because many are listed companies within the hospitality space that have set up presence there. The Taj Group, IHCL, Lemon Tree Hotels, and there are many others who are already setting up, and a lot of them are listed on the stock exchanges too.
100% Sakshi. If you see even the results of all these hotel chains which you spoken about, no, the results are good. Even if you see it's a double-digit revenue growth, plus if you see average revenue per bed is growing by almost 15 to 20%. Most of the hotels chains, no, have given a big expansion plan. Like Indian Hotels, they told they are going to bring 4,000 more rooms in future, and again even ITC, Lemon Tree, everyone Ginger and all that. So many hotel chains are giving their own expansion plan. And again, the government focus is there on the tourism, because India is such a diversified country. No, means we have so much location where one can go and explore. So I think that is where I think government tourism is boosting. Of course, UP tourism is boosting, and even now, if Kashmir issue is resolved, I think there also the boost will come back, because that was one of the thing which was actually lagging behind the hotels. But I think that will also be stabilized in future. So yeah, this is a place where even I am very much bullish, and I think all these names which I have spoken, these are the stocks you can invest for the future. I think a decent return you will get it for next 5 to 10 years, as and when government focus more will be there. Plus you see the roads and all that, now it is good. So I think transportation become much more easier, and the flights and booking and all that. So it's a complete ecosystem which will get a big boost in coming years.
Okay. In fact, local businesses including restaurants, travel operators, souvenir shops, prasad sellers, puja material vendors, they're also experiencing highest ever sales at this point in time in Ayodhya as well. How do you see this entire space, the QSR space, the restaurant related chains that will be now opening there? Also, when we look at the travel operators, a lot of them are also listed. How are you looking at that opportunity?
About QSR now, QSR is a tough business to do now, because so much of competition. We are competing with local dhaba also, but so their competition will be on a higher side. So you have to be little bit choosy when. Of course, I talk about listed stocks and all that. So there you have to be little bit choosing, selecting the stocks and all that. But I feel that hotel industry may do well, even traveling little bit. But I think main beneficiary will be the hotel industry, because it's not easy to set up a hotel overnight. Correct. And compared to QSR, but QSR I think in that area will do well. In that area, of course, they will do well. But of course, from the investor point of view, I'll go for hotel industry.
Okay, got that. We are also given to understand that Ayodhya is likely to contribute 25% of UP's tourism market by 2028, and Uttar Pradesh's tourism industry is expected to grow into a 70,000 crore rupees sector by 2028, with Ayodhya projected to contribute 25%. Now, temple-related economic activity has already generated 1.25 lakh crore rupees for the state already. Officials now say Ayodhya's tourism boom will also play a major role in reaching the next revenue target of 4 lakh crore rupees as well. How are you seeing that, Tapan?
Well, that's a big number. Still now we have seen Tirupati only creating this type of buzz, but now you have another place also, Ayodhya. I think I think in next 2-3 years, I think this revenue is going to go up, and UP is right in projecting, the government is right in projecting, they are going to give a big revenue share, and everyone we know it's a Hindu country, so they want to go there. So yes, it will be a big boost, and I think that is what I think one can keep an eye on which are the hotels or QS players are all that are establishing there, and which are having a good occupancy and all that, and so one can invest in that stock in future, keeping that what type of market share they have in that area.
Absolutely. In fact, let me just highlight for all our viewers what exactly is happening today. Remember the saffron flag that will measure 22 feet by 11 feet. It features 3 sacred symbols as well, which are hand embroidered in golden thread. The sun representing Lord Ram's Surya Vansh lineage and eternal energy. The sacred Om symbolizing spiritual vibration, and the motifs of the Kovidar tree, which denotes purity, prosperity, and Ram Rajya. That will be hoisted today on the Ram temple, and that's what is making it all the more special in today's trading session. And you can actually see some of the key visuals there of some of the shots that we have picked up from our sister channel India Today. And of course, maybe some time from now you will actually get to witness that live even on Business Today as well. But let's try and go across to the stock markets and the cues that we are getting from there as well now. Tapan, this story is definitely developing, and we will keep touching base on Ayodhya time and again. On the markets per se, Tapan, what exactly is your sense when it comes to the trajectory we are taking at this point in time? So far in the last few weeks, every attempt to stay on course above 26,000 has been met with selling pressure. What do you think, are you looking at in the current trend in the markets?
So market is in much more positive phase now, because if you see that of course result season is over. That was a mixed result season, but I think everyone is excited about October to December quarter, where the result is going to come in maybe first week of second week of January. I think this Diwali festival, again the GST rationalization, you can see a good demand in consumer durables, automobiles and across. And again the interest rate cut may happen. RBI may cut interest rate in December also. So inflation is all time low. So all this I think is a positive sign for the domestic segment, and that is, I think October to December quarter is going to go well. And that result will be coming in first and second week of January. I think that will be the key catalyst from here, the market. And again the US or India trade may happen by December, and I hope so. So that will be another positive trigger. So I don't see a big downfall from here unless something bad news comes on the US front now. Like we already know that US AI capex is increasing a lot, and that is having a bubble site theory and all that. But when it will burst, we don't know. But yes, that is where now everyone is keeping an eye. But otherwise, domestic front, I think things are much better. And as and when the market will recover, I think FII is going to come back. Currently DII is supporting, but maybe first half, that is January to June 2026, will be much better for the market.
Okay, fair point. I hope this has helped you out in understanding the current trend of the market. Let's try and understand what's happening on the brokerage houses front as well. We have a lot of brokerage houses that have come out with their reports too. Let's start off with the biggest listed stock on the markets, and that's Reliance Industries. More and more brokerage houses are now turning overweight on the stock. With yesterday, of course, we did see a positive report coming in today. Again, we have JP Morgan come out with an overweight call on Reliance with a target price of 17.27. The stock is already up by 1.3%. In fact, if you look at the last 1 month alone, Reliance Industries shares have shot up substantially. Almost 25-27% of a rally is what you've already seen on the stock as well. In fact, on a year-to-date basis, this 27% gain has been seen. In the last 1 month alone, we've seen a maximum part of this surge. This has surpassed Nifty's surge also this year so far. In fact, valuations, most of the experts believe, are still attractive, with refining, petchem weakness also seeming to be behind, and a lot of upcoming triggers from the telecom side is something that people are looking at. So let's find out whether this is the right time for you to look at Reliance Industries to add to your portfolios. What would you say, Taman?
Yeah, of course, even I am positive on Reliance. One of the key catalysts will be in next 6 months will be the demerger of Reliance Jio. which they already told in AGM that maybe in the first of 2026 it may happen. And if it happens, I think Reliance Jio will create a very good value unlocking. You know that Reliance, this Jio Finance, when it got demerged, I think that has created a good value for the investor. I think same thing may happen for Reliance Jio. Again, in next another 1 year, we may see Reliance Retail after Reliance Jio get demerged. I think this will be two bigger catalysts, and that is why I am too much positive, because when this segregation happened, Reliance Jio separately, retail and Petrochem, plus I think Reliance Energy, which is going to be in operation in next 6 months or 1 year, that will also start giving a good revenue. So all these things is a positive trigger, and as you told correctly, Reliance Jio, see, it's a cash cow, and even I think from here also the ARPU may go up because the price hike may come up in next 6 months, and they are doing quite well. So that is a Reliance Retail, we know number one in retail chain. So I think all these are positive, and the valuation is still attractive. It's not at all expensive. I think if someone wants to think, they can invest now, but stay for 2 years at least, so that complete value unlocking happen, and I think it may give a much better return from here.
Okay, got that. I hope this has also helped you out. Let's also focus on the auto space as well. We have HSBC coming out with a report on Tata Motors passenger vehicle. And in fact, what we have seen in the report that has come in is that this time around HSBC has cut the target price for Tata Motors passenger vehicles and continues to remain on a hold category at this point in time as well. Now, what is the key reason behind it is something that we will continue to look at. What they believe is that the shares of Tata Motors passenger vehicles, they've cut down to 14% to 400 rupees, maintaining a hold recommendation on the stock. They believe the risks associated with the company's UK subsidiary JLR are expected to outweigh the growth potential of the India business, according to the brokerage that they have come out with. Let's try and find out what exactly is happening on that front. We have seen last couple of weeks the triggers that came in on the demerger front, Tata Motors passenger vehicles and Tata Motors commercial vehicles both getting listed now. The consolidated business had already underperformed hugely in the year 2025. Now with the demerger coming in, of course, investors have a choice to choose between which business do they want to go with. But at this point in time, brokerages are already highlighting some of the negative impacts that could be seen. How would you look at Tata Motors?
See, Tata Motors passenger vehicle, as you rightly told, that UK subsidiary, that JLR cyber attack which happened, no, it's going to wipe off most of their profitability. And that is the fear which all the analysts and investors are having, that if it drags a lot, then it will have an impact. Almost no, Tata Motors for next 6 months, 1 year may not create a big buzz. Even though if you see the domestic side, it is doing quite well. Even the numbers of quarterly updates and all that, monthly updates numbers are also good. But the problem is the UK subsidiary. And I think China demand is also not coming, because Jaguar Land Rover, there also, if you see their demand in China is quite good. There also it is not coming up. So that is the biggest issue. If you talk about valuation front of view, Tata Motor passenger vehicle is the valuation is very low compared to all other competitors like Maruti or Mahindra and Mahindra and all that. But the problem is still the clouds over the what will be the earning for Jaguar Land Rover, because they are the cash cow for the Tata Motors. So that is the problem. Even I think from here one has to watch the next quarter result and then only take a decision, because I think it will take time to recover. Compared to that, I feel that Tata Motor commercial vehicle is much more better poised. I think there are no such a big issue, and I think from here also demand will be good. So I think if someone wants to go at this level, I think commercial vehicle will be a better option compared to passenger vehicle.
Okay, got that. Let me also shift focus, in fact, to understand what's happening on the other spaces in the auto space beyond Tata Motors as well. Four-wheelers, two-wheelers, how are you looking at it? Auto ancillaries. Of course, we had seen some uptick because of the GST rate cuts that were announced, because of the sentiment booster. The quarterly result that was just announced did not have too much of an impact, because only last few days of an impact would have been penciled in. Most of the auto companies have penciled in that Q3 and Q4 will be better quarters to really look at the clear impact of GST rate cuts and how the demand uptick has led to volume growth there. Give us an understanding on the entire auto space right now. Where do you find confidence and value even at the current levels?
I think Sakshi, this is the best last 6 months of auto industry I ever can have. Because of the GST rationalization, you see the big rally coming in all four-wheeler, two-wheeler. And as you rightly told, I think next quarter three, quarter four, it may continue because GST rationalization will take time and slowly and gradually, people may buy more. I'm more bullish on two-wheelers. Like the TVS motor, Eicher today already touched all-time high. Even if you want to take value pick, Hero Honda and I think Bajaj Auto gives a good value. It's like a value pick because their valuation is comparatively lower than TVS and Eicher. And if you want to go for four-wheeler, I think M&M and Maruti is a better option. But still, of course, one can argue this stock has gone up a lot. But I think still the room is there. And I think these are the stock in a category where you can buy at dips. Now, if the automobiles goes up, auto ancillary cannot be behind. They will also grow. And no, but you have to be focused because auto ancillary, there are too many companies and you have to focus on which are focused on EV and specialized products and all that. I think there you can talk about Uno Minda or Motherson Sumi. These are some of the stock now you can keep an eye. But yes, I think this is the phase where now the auto ancillary will start moving up. The whole ecosystem is very well poised up, and I think because the interest rate is on a lower side, I think demand will be there. So yes, I'm still bullish for next 3 months or 6 months, but better to buy at dips. I know as and when the if market goes down, if they goes by 5-10%, all these stock which I have spoken, you can start actually.
Okay, got that. Let me now shift focus to the oil and gas sector, viewers, especially India's oil marketing companies, that is IOC, HPCL and BPCL, where you go to fill your petrol and diesel on an everyday basis as well. What's the outlook here particularly? Well, these have actually gotten a downgrade by brokerage firm Investec in its latest note. Now, what Investec believes is that the market appears to be overlooking a key risk for these companies, because remember, just before this report came in, last couple of weeks, a lot of people were turning bullish on the OMCs, looking at the benign impact of the crude oil prices and the opportunities going forward. But what has Investec said? They are saying that although Investec has downgraded HPCL, BPCL, IOC to sell from hold earlier, it has left the price targets on these stocks unchanged to 425, 330 and 145 respectively. Now the price targets imply potential downside of 8% each for HPCL, BPCL and 12% downside for IOC. Now the brokerage firm Investec has written that investors' interest has seen a sharp surge in OMCs along with simultaneous rise in refining margins. Singapore gross refining margins have doubled in less than 2 months to $13 per barrel, according to the brokerage. But since October 2025, the shares of these companies have also risen anywhere between 20 to 25%. But the market, according to Investec, appears to be overlooking the risk of diesel cracks. The profitability of these OMCs is far more sensitive, it says, to marketing margins, which, according to Investec, have weakened materially. They believe, despite the crude oil prices remaining soft, the same diesel cracks that are aiding the refining margins have now pushed the diesel marketing margins into negative territory from around 4 rupees to around 4 rupees per litre earlier. Now, just remember, we'll try and understand what this really means. How would you assess the OMC market at this point in time, Tapan? What do you think are the key risk factors? What should investors know if they are heavily invested into OMCs?
Yes. OMC was a flavor of the day. If you see last 6 months, 1 year, they've gone up a lot, and even I was bullish on that. The reason is simple: that margin were expanding and the GRM also going up and all that. But no, as it rightly told, from last 1 or 2 months, you can see the cracks and all that. But we have to understand that oil is going to remain below $70. I think maybe for next 1 or 1.5 years. So yes, we may not get that type of uptick in GRM and that type of uptick on the margin which it got in last few quarters, but it may remain stable. Now we have to see up to what long the oil prices remain at a lower side. If it it remains lower side for maybe another 1 or 2 years. I think still here, these are the stocks which may give you a decent return, not an extraordinary return which they have given in the past. So if someone is thinking like a decent return, still they can hold it. Of course, you should not buy it, and if you want to buy it, maybe 10-15% lower it comes, then you buy it. Until the oil does not cross, I think 70-75. I think these are the stock we should stay invested.
These are the stocks you should stay invested in. Okay, got that. Apart from this, Tapan, would you be able to share any of the other key areas that you're turning bullish on in the current position in the markets? Because we have been seeing a lot of volatility. Where exactly are you finding comfort?
I think the comfort is coming on NBFC. NBFC, if you see, still the interest rate go down, and that will increase the net interest margin. Of course, all this stock has gone up, but I think there still legs are there. The rooms is there, so that the stock can go up. Like some of like Bajaj Finance, even like Muthoot Finance, and you can say that L&T Finance. Now, all this stock I think still may go up, and net interest margin may improve. Even the banks, if you want to go, I think PSU banks still are much more favorable. The valuation also on a lower side. If you want to take SBI, Bob or PNB, I think still the valuation on a lower side compared to private banks, and still I think that credit growth in banks will be in a much better compared to the private banks. So that is another place. And the defense play, I know it's quite fluctuating, the earnings season and all that, but I think from here you can Mazagon or HL, you can think about it.
Yes, absolutely. You rightly pointed about the defense space, because we had been seeing some upticks of late, but at the same time, there is a lot of worry whether these valuations will again sustain, or is there room for further upside from these current levels as well. The index is up by 0.7%, HL, BL, even the shipbuilder stocks that are higher in trade today. Any space that you still believe is good enough to continue accumulating via SIPs?
Yeah, I think defense is one of the space now, because where you can do, or if you don't able to understand defense, you can buy ETF also, defense ETF. That will be also good option for next 5-10 years. But yes, this is a space I think you can do an SIP. And another space we earlier discussed, tourism. I think that where hotel industry, I think that is also one space now where you can do an SIP. Even I will go, another one is the hospitals. Hospitals also, I think they will have a good mega trend in coming years.
Okay, fair point. All right. Thank you so much then, Tapan, for being with us on the show, and of course giving us all your insights on the markets. Let's now focus back on the markets, viewers, and try to wrap up the show. What's hot here? 26,007, 47 points higher. We're still holding up above, the 26,000 odd mark, 50 points higher almost in trade. But let's see whether we can actually sustain through these levels, because yesterday we'd already given up, the gains that we had garnered in the morning edition. What happens today will be of importance again. Now remember, the volatility index is still lower. That's good. But real estate space, that's up by 1.5%. Metal space, that's up in trade as well. You also have names like banking space, PSU banks, pharma. Even the broader markets, mid caps are holding up strong. Barring IT, media and FMCG, rest of the sectors are still holding up into the green. Hindalco is the top mover. You have BL as among the top movers as well, 1.5% higher. Dr. Reddy's is up. JSW Steel, Max Healthcare, Tata Steel, these are all the other stocks that are hovering higher. On the downside, Adani Enterprises, Infosys, Trent, Tata Consumer Products, Wipro, HCL Tech will be the stocks that are still reeling under some pressure at this stage in time as well. What's really happening when we talk about the PSU stocks? Well, BHEL, BL we've already marked out, NHPC, Power Finance Corporation, NTPC, a lot of those power related names that are in focus, at least for now as well. We'll wrap it up on that note. Thank you so much for joining in. I hope this show has interested you as well, and do mention in the comment section below as to what would you really want to watch as part of What's Hot that discusses the biggest buzz on the day straight. If there is something in your mind, we would love to hear from you as well. But do stay tuned. Market coverage on the other side continues. In case you have questions about the stocks in your portfolio, ask them away at 12 noon on daily calls. I'll be back with that, and Anshul Jain from Lakshmi Shri Investments will be joining in on the show with that.